Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the FNOQs. I'll talk about the general trade setup. So let's move on and see what's happening as far as Asia is concerned. Asia is trading positive. The SGX Nifty is indicating a positive bias. Come off from the day's low, but still much below the day's high of almost 35 points. But we're trading about the 10,300 mark in trade. As far as the ADR is concerned, positive cues coming in from there. Negative. ICICI Bank was down almost 2.7%. Dr. Reddy's was also down close to 2%. What did well was Vedanta. Vedanta was up almost 1.4%, given the fact that metals are doing extremely well. As far as crude is concerned, it dropped by almost close to 1% in overnight trade. On the morning trade, it's trading slightly with a positive bias, but the US stockpiles data that was released by the government indicating that there is a declining trend, and that is something that is not boding well for crude currently. As far as commodity is concerned, a mixed closing for the base metals on LME. Some of them did well, some of them didn't. So what did well was copper and nickel were up almost 0.7%. Lead was the biggest gainer, up over 1%. Aluminium was down close to 1%, trading weak in China also, and zinc fell close to 0.5%. As far as China is concerned, copper is up almost 1% in China. Steel is up almost 1.1%. Aluminium is down 1.5%. Rubber is also trading weak in China currently. So that's the general trend setup as far as commodities is concerned. Gold fell almost to 1.2% overnight, but in morning trade, it's trading with a slight positive bias. As far as fund flows are concerned, FIs were net sellers to the tune of 360 crores in the cash market. This is the NSE provisional data that came out. The actual data by DIs was a net buy of almost 613 crores, but massive buying by the FIs in the cash market this month. FIs have bought in close to 16,000 crores in the cash market this month. DIs have also been net buyers. They bought in almost 5,000 crores and 5,300 crores in the cash market this month also. What did well, what didn't do well, IT and PSU banks were trading rather weak in trade. The rupee appreciation not helping the IT index. Metals and real estate stocks again managed to rally significantly in trade. Now the Nifty was up just 15 points, but Reliance was a big contributor. A big Goldman report coming in out today that will be in focus. The private banks, apart from ICICI, did well, so they contributed. ICICI contributed a negative downtick of almost 11 points. HDFC, Infosys, and SBI were the other contributors. But overall, 15 points. But Agam, 13 stocks in the FNO ban. What can you say?
Absolutely, Darshan. We are going to see restricted trade, at least as far as those 13 stocks are concerned. But when it comes to the markets in general, the benchmarks at least, we've seen very little change in open interest, at least for the Nifty futures. It is a similar situation when it comes to the Nifty bank futures as well. Very little change in the index, however, a percent added when it comes to its open interest. With that, moving in, when it comes to the India Volatility Index, again, we have seen it come off. It remains within a band of 13 and 14, and predictably, we haven't really seen too much change in the Nifty put-call ratio either, currently standing at around 1.23. In terms of changes in open interest, so what we're looking at is a lot more writing in the 10,200 call, and as you can see, a little more writing in the 10,500 calls as well. So some consolidation coming along then. In terms of some stocks that we are watching out for, as Darshan was just talking about, two more stocks in the list, in the long list of FNO ban. So Just Dial and TV18 as a part of that, and we're also looking at a lot of activity in the relatively smaller Tata Group companies. Of course, Tata Power is not that small. Tata Power saw about an addition of 14% towards fresh longs, but Voltas and Tata Elxsi have also seen good amount of fresh longs building in. So these are some of the stocks that we'll be watching out for in today's day of trade.
Good set of numbers coming in from MIRC Electronics, and could be the stock of the day for that matter. If you see, the company has reported a third straight quarter of profits. Look at the revenue number. That's almost risen by 39% at a number of around 200 odd crore as compared to a value of nearly 144 odd crore in the corresponding quarter. For that matter, if you look at the profitability, that's almost, the company has reported a profit of 12 odd crore as compared to a loss of nearly 10 odd crore that we saw in the corresponding quarter. It's a great, good performance even on a operational fronts, which has jumped multifold to a number of 20.8% as compared to meagerly 7.3% in the September quarter of the previous year. Margins for that expanded. They have doubled to 10% as compared to 5% seen in the corresponding quarter. So what goes behind the making of these numbers? Well, A will be the high revenue and good operational performance. So what has led to a good operational performance? It's the employee expense. That as a percentage to your net sales has come down to 9% from 12% earlier. Also, if you look at other expenses, they have almost, that's a good jump out there. This besides the low finance cost and depreciation has also aided the profitability. Except now please do remember that the company had an exceptional loss of nearly 9.63 crore in the base quarter Also, if you're supposed to look at what does the company do, well, it's the owner of the Onina brand and has a market capitalization of roughly 722 crore. It's a consumer durable segment. The primary segment is consumer durable and has a relatively higher PE as compared to its peers. Also, if you look at the shareholding pattern for that company, 58% has been owned by the promoters of the company, while 42% stake has been held by the public shareholding as per the BSE September filings. Also, what could be the potentially possible trigger for today's move will be the company said that it's open to selling business and plans, though the promoters are not out there in the market, but then they would not mind if a PE comes up. PE funds come with an valuation of roughly 5 to 6 times. So that's something that will interest the streets, I believe, and we should keep an eye out on the stock on account of this news. With that, let's toss over to Jayesh on commodity market.
Thanks for that, Nikki. Let me start off with oil prices, which have seen some bit of softness come about after Friday's rally of nearly 3%. A couple of reasons that we are picking up for this particular softness is one is we are seeing some political instability come out of Germany, and also UAE has made a comment that they see logic for OPEC to extend the output cut going into the Vienna meeting on November 30th. So we'll be keeping a close watch on that one. And also BlackRock has made a statement in which they say oil's bull run has been moderating as OPEC meeting looms. So, essentially everyone's just looking out for the Vienna meeting, and we'll be on top of it to get the latest updates for you. Moving on to the precious metal space, most of the precious metals declined as the dollar was seen on a rebound trajectory. In fact, gold posted, a 1% loss on the back of dollar index, which was headed for the first advance in about 5 sessions. From the base metal space, we got some mixed cues on the London Metal Exchange. Aluminium and zinc declined in trade. Lead, copper and nickel advanced. In fact, aluminium was at a 3-month low on China output reports, and we saw copper inventory fall by about 2.5%. That said, but Saloni, yesterday the bond market was in focus. I believe 16 basis points was the cut that was seen on the yields.
So absolutely, Jayesh, the bond yield, the 10-year bond yields ended 16 basis points lower at 6.89%, its biggest drop since November 2016. Now, the yields dropped after RBI scrapped its plan to sell bonds worth rupees 10,000 crore via open market operations. Now, RBI's move came after Moody investors upgraded India's rating and changed the outlook from stable to positive. Also, global funds reduced their rupee debt holdings. Yesterday, they reduced their debt portfolio by approximately 80 crores according to NSDL data. Now, speaking about currency market, the rupee ended weakened by 10 basis points and ended at 65.11 levels against the dollar due to renewed dollar demand from the importers. Also, a sudden rebound in crude oil prices after its 2-day fall also pressurized the home currency. However, abundant capital inflows largely supported the rupee. Now, speaking about inflows, foreign investors have pumped in close to 15,000 crore rupees so far this month in November. Speaking about dollar rupee now, it is trading flat in the non-deliverable forward market. On the global front, dollar index is trading near 1-week high of 94.10 levels. Now, all eyes will be on Fed Chair Yellen's speech, which is scheduled for tomorrow, and also FOMC meeting minutes, which is scheduled for this week. So it will remain a key watch for overall currency pairs. So do keep an eye on all this.
includes L&T Finance, where Citi has opened its book for Bain Capital to sell its 2.15% stake, which is 3.9 crore shares in L&T Finance. Now, the shares are worth $109 million as of yesterday's closing price. The offer price has been set at 180.5 to 188.05. That's a discount of up to 4%. So we could see some negative reaction there. Citi is underwriting the deal, but it's Bain Capital which is selling. Next, we also are tracking Quest Corp. That company will buy 51% stake in Tata Business Support Services, and that will be for 153 crores. Now, this is a Tata Sons subsidiary, and it provides customer lifecycle management and business process management. Now, the company had reported revenues of 661 crores in FY17. So, based on the price at which they're buying it, it is valuing the company at about half, 0.5 times its trailing sales of FY17. So, valuation seems quite attractive for Quest Corp. We are also tracking Infibeam, which according to ET report is in talks to sell minority stake to Fairfax Financial Holdings. So keep an eye out on that name. We also have a couple of names on the back of bulk deals. First, on the back of order wins, we are tracking Simplex Infra, where it has received an order worth 524 crores from NBCC. And then you also have ARSS Infra. It's a much smaller company, but they have won an order of about 87 crores. That's about 10% of FY17 revenues. And lastly, on the back of bulk deals, we are tracking BCL Industries and Infrastructure. Now, this is a edible oils company which has a market capitalization of about 155 crores. Purinju Veliath has bought 2 lakh shares yesterday at the price of 109.9. So we are likely to see a positive reaction there. And we're also tracking Mercator, where Nomura has bought 41.2 lakh shares. So all of those names could be in focus today. Watch out for them.
8 non-existent companies linked with India's largest business houses like Reliance Industries, Tata Sons and State Bank of India featured in a list of companies that were recently struck off by the Ministry of Corporate Affairs. One of the 8 companies that was struck off by the ROC Mumbai was Reliance Logistics Private Limited, a subsidiary of RIL, which was merged with Ahmedabad-based Vimal Fabrics in 2003. This company's headquarters was changed from Ahmedabad to Mumbai, and the company was again renamed to Reliance Logistics Private Limited, as per information shared by an RIL executive. Now, Bloomberg Quint couldn't independently verify all this information, as ROC's website wasn't updated with all this information. A Reliance spokesperson told Bloomberg Quint that as ROC's website wasn't, as ROC's records were not updated, a notice for striking off a company's subsidiary was served to the company, and the company has taken up this matter with ROC and will address this issue. Another company owned by Tata Group, Tata Finlay, was renamed to Tata Tea Limited in 1983 and was rechristened to Tata Global Beverages in 2010. This company, after it was renamed to Tata Tea Limited, its registered office was moved from Mumbai to West Bengal. That means that it no longer came under the jurisdiction of ROC Mumbai, which struck off the company's name from the register of companies.
State-run Oil and Natural Gas Corporation is expecting to save thousands of dollars in oil and rig costs. This is because they had hired services at about 1/3 at the current rates. Now, the service costs have reduced in the past 2 years because of the falling oil demand. Oil prices and service costs move in tandem depending on the demand and supply situation. ONGC is reaping the benefits of it when the pacts were signed when the crude oil price was at $30 per barrel. Currently, it is at $64 per barrel. Earlier, an offshore jack rig used to cost the company at about $1 lakh per day, whereas now the rental cost is $30,000 to $35,000 per day, the chairman had recently told us. An oil and gas expert has also told that shallow water jackup rig, which ONGC mostly uses, the cost of it has come down by about 55 to 65% in the last 2 years. Now, the lower costs have also pushed up the company's net realization, which stood at $51 per barrel during the second quarter of this financial year. This was 6.9% higher than the realization during the corresponding quarter of the last financial year. But according to the former ONGC CMD, RS Sharma, he says that the service costs are likely to go up because of the increase in oil prices due to the Saudi-Iran tensions.
Logistics sector has now received the infrastructure status. Now government has now changed the earlier transport category to transport and logistics category and has included logistic infrastructure as an infrastructure subsector in the list. Now transport and logistics include roads, bridges, ports, shipyards, inland waterways, airport, railway tracks, and also urban transport services. But what has been added and what is new is the logistics infrastructure. So what does it cover? Logistic infrastructure means and includes multimodal logistics parks with a minimum investment of 50 crore rupees and an minimum area of 10 acre. Cold chain facility with a minimum investment of 15 crore rupees and a minimum area of 20,000 square feet. And also it includes warehousing facilities with a minimum investment of 25 crore rupees and a minimum area of 1 lakh square feet. So how does it benefit the sector? The sector is now likely to attract more funds at competitive rates. Having an infrastructure status would also help the logistics sector get credit at marginally lower interest rate and on a long-term basis. Now this will also give the sector access to large amounts of funds as external commercial borrowings. Now this move could also attract large debt and pension funds to invest in the sector. And lastly, it will also help the developers reduce the cost of borrowing. So why was this move needed? Now logistic cost in India is currently very high. India spends around 13% of the GDP on logistics, which is more than US and Germany. US spends around 9.5% of GDP on logistics cost, while Germany spends around 8% of GDP on logistics. Now as logistics cost in India is high, Indian goods become less competitive in the global markets. So this move will not only help the logistics sector get funds easily, but also help the Indian goods make cheaper globally. Now if you see the companies that would benefit from this, there are a bunch of companies, but the important ones to name are TCI Express, Snowman Logistics, Mahindra Logistics, All Cargo Logistics, Blue Dart Express, and Container Corp. Now let's listen into the Telecom Secretary's view on the job losses in the telecom sector due to consolidation.
By the end of December 2018, we expect that about 100 million villages, 100 million Indians, rural Indians, will start getting internet on their mobiles or on their homes. So all the 4 big telecom service providers, Reliance Jio, Airtel, Voda Idea and BSNL have already made their commitments to the minister last week. So we expect to see the rollout of services start immediately.
And on the industry front, ma'am, there were a lot of comments in the past that we saw on the industry's health concern, and subsequently an IMG was set up. I believe there's some work still left before the recommendations are given to the cabinet for final approval. Yes. What exactly are some of the work left on that recommendation front and discussions, if you can give us an idea on that?
Yeah. So the IMG had given its recommendations, and this was considered by the Telecom Commission almost a month or so back. But there were a couple of clarifications which the Telecom Commission had wanted, and this was on some of the legal implications of the recommendations given. And so for these, we have already referred it to TRAI. And one of the important recommendations on this is, the spectrum caps. Right now there is a cap on the maximum amount of spectrum that an operator can hold. And so some of the operators had said that, give us some relaxation on the caps so that we can then either, sell that spectrum to somebody or make use of it. So that is the aspect on which we are awaiting the recommendations of the TRAI.
And the second question, you've also talked about the consolidation that's happening in the industry, but one of the effects of that has been these news about job losses in certain companies. Do you think that is a matter of concern for you, or what's your opinion on this topic as far as concerned?
See, the telecom sector is undergoing some churn. It's undergoing consolidation. But don't forget that it is undergoing huge expansion, first of all. The mobile tower infrastructure in the country has been doubled in the last 3 years. The optic fiber infrastructure, we have added 30% additional optic fiber in the last 3 years. And I mentioned to you that we're also going to be having almost 1 million Wi-Fi hotspots. Now, all of this is also creating huge amount of jobs at the grassroots level. So what we are reading about is the loss of management sector jobs. But what we are not gaining sight of is the huge job creation that's happening at the ground level.
Let's now look at some of the stocks that were in action based on their cash volume. Starting off with Biocon, the stock was up more than 7% and saw delivery buying in excess of 70 crores. The delivery volume was up 134% at nearly 16.5 lakh shares versus the 10-day average. The total volume too surged about 150% at nearly 88 lakh shares versus the 10-day average. Now, more than 40% of the analysts who cover this stock have revised their price target upwards in the last 1 month as per Bloomberg data. The second stock to watch out for would be Tata Global Beverages. The stock was up nearly 6% and saw delivery buying in excess of 120 crores. The delivery volume nearly doubled at about 46 lakh shares versus the 10-day average, and the total volume was up 60% at about 1.6 crore shares versus the 10-day average. The third and final stock to watch out for would be Tata Power. It was up 3% yesterday, delivery buying of more than 75 crores, and delivery volume surged more than 110% at 84 lakh shares versus the 10-day average, and the total volume too surged nearly 170% at 2.5 crore shares versus the 10-day average. But let's now shift focus and listen into Muhammad Yunus, who believes that financial inclusion will not be a good idea.
The social business is designed to solve problems. If people are in distress, if people cannot do something, do in a business relationship, maintain the business relationship, then something wrong with your design of that business, because social business has to come in a business way. So it's a question of how elaborately you have designed that. For example, just to give you a few examples, in Grameen Bank, if somebody is unable to pay for crisis, we are always in crisis in Bangladesh because of the floods. Every other year, there's a terrible flood nationwide. Sometimes one part of the country is under flood. Nobody has mentioned that. It comes and goes. But people suffer. People lose everything in that particular. So we have a disaster policy in the bank, that the moment any flood in anywhere happens, the manager of the branch manager declares an emergency situation, disaster situation. And once he declares a disaster situation, his immediate job is to save people, use bank's money. So you can use bank money to save people, to take them to a safe place, to dry place, feed them, take care of them, everything out of the money. So this is built in, so you don't abandon them because they own this bank and they would have to do that. And then we go on, once flood recedes, our first job is to make them stand on their feet. Even they can earn 25 paisa a day, help them to earn that 25 paisa so that they start building their confidence to do that. You issue fresh loans for them. And when they go back, make sure whatever damages is done, it's a separate issue, we'll pack it up for a future repayment. It's a long-term loan, don't worry about this now. Get started right now. Right now, they need the money. They have to be financed so that they can start. As soon as you can start, they can stand on their feet. As we keep telling them, if people stand on the feet, then Grameen Bank can stand on the feet. If people cannot stand on the feet, Grameen Bank is over. You don't have any meaning for that anymore, because if you don't get the cycles of businesses and doing things, what is the bank doing for? So this is the end of it. So we built everything like that. When a woman dies, or one of our borrower dies, whatever loan she owns is waived completely, right away. It's built in. You know that no family member will be responsible to pay back. So that's the end of it. We create pension funds so that when they go old, cannot work anymore, so that you can sustain yourself out of the pension fund. You create it. It's not somebody gave it to you. You create over the years a fund which will be enough, will generate income for you so that every month you get income out of the fund that you created yourself.
On brokerages, first we have is Goldman Sachs on Reliance Industries. Now they have maintained their buy rating but have hiked their target price to 1,205 from 960 rupees. Now when it comes to Asia, according to Goldman Sachs, Reliance Industries provides the best large cap downstream energy company. Now they're expecting the company's EBITDA to double to $14 billion by financial year 2020 from $7 billion in financial year 2017. Now they are positive on the stock on the back of volume-led growth with capex cycle completion, refining margins to remain outperforming refining margins, and the telecom business to start contributing positively from financial year 2019. Now they are saying that going forward, petrochemical will be the key driver for growth over the medium term, while refining margins are expected to remain stable. They are also saying that Jio will start contributing from financial year 2019 and can contribute an EBITDA of around $5 billion by financial year 2025. They are saying that the core business of Reliance Industries is currently trading at an unjustified discount to peers, and with capex completion, they are expecting the free cash flow of the company to turn positive after 5 years of negative free cash flow, and the yield will be around 6% by financial year 2019. Second, we have is BOB Capital on Somani Ceramics. Now they have initiated a coverage on the stock with a buy rating and target price of $975, which suggests a potential upside of 15%. Now Somani Ceramics is the third largest organized tile manufacturer in India with a market share of around 15% when it comes to the organized tile market in India. Now they are positive on the stock on the back of cut in GST rate from 28% to 18%, company's expanded value-added portfolio, and company's focus on fast-growing Tier 2 and Tier 3 cities. On the back of these positives, they're expecting the company's revenue and net profit to grow at a compounded annual growth rate of 12% and 23% over FY17 to FY20. They're also saying that the company's foray into sanitary ware and allied products will boost the company's margin going forward, and the asset-led business model of the company will expand the company's return ratios to 21% by financial year 2020 from 19% in financial year 2017.
Well, here are a couple of stories that you should consider reading on the website bloombergquint.com. First up, in the real estate space, the top 3 Indian metros, Mumbai, Delhi and Bengaluru, aren't really attractive for real estate investors at the moment. That's because demonetization and the GST rollout have created liquidity issues for the real estate sector in those spaces, impacting investment and development opportunities. That's according to a PwC report. Moving on, President Donald Trump has said that he will designate North Korea as state sponsor of terrorism, subjecting the regime to additional sanctions and reinforcing its status as an international pariah. It isn't really a shift in stance though, as North Korea is actually finding itself increasingly isolated. That announcement is expected later today. Well, with that, it's a wrap on this edition of All You Need to Know. Up next is Indian Open. Do stay tuned. This is Bloomberg Quint.